Hello there. Welcome back to EBM Info. In this video, we want to look at a question from question paper of June 2024. This is the recent question paper that was written, and we're going to look at question 3.2 of that question paper, which is on the cash flow statement. The question reads, I use the following information to draw up the estimated cash flow statement for the next 3 months at the end of April 2024. There was a favorable bank balance of 9,500 rands. Answer this question on the answer sheet. Attach, write your examination number on the answer sheet. Detach it from the question paper and edit it with the answer book. So this is information that we are given instruction in terms of the answer book. Then we're given a table that we're given there where we're having a column of month, estimated sales, and then estimated purchases. So you go down, you'll see that we've got other information that we are given there, and then the information is ranging from information 1 to information 6. So what is important is to go through this other information so that we can make the adjustment. But before we do that, we can just maybe go through our answer section. So this is going to be our answer section, whereby the 3 months that we are going to be preparing according to the question that we are doing is from May to July. That is May, June, July. And then we're going to start with the opening balance that we have there. But if you go back there, you see that we are given the opening balance at the beginning of the question. That is, we are given it as 9,500 here. It's a favorable balance. Very important to take notes. Very important to take note that. So let's just try to see there. We have we have our opening balance 9,500 being a favorable bank balance, which means it's a positive. So it means we're going to start with a positive 9,500. So basically, we go to the answer section and put that 9,500 as a positive. That is our opening balance, 9,500. Remember, if it was a negative, we are going to put it as in brackets to show that it's a negative balance. So we go back there. After that, you are supposed to go to the additional information. That is the other information, and try to enter the adjustment that you are given there. Then on the first one is saying the average expenses per month are with wages, rental, telephone, electricity, and fuel. So you see that there's nothing that is given here. There's nothing that is given here. So it means all these expenses that we are given there, they amount to 0. So we don't have anything. So we can just leave it. We go to the next one. The next one says a printer was bought in May. The deposit of 2,500 was paid, and monthly payment thereafter would be 650 rands for the next 2 years. So basically what it means is in the month of May, we are going to have a deposit of 2,500 that we are going to pay. So all the monthly payments, we're going to put 2,500 in May. Then after, that is now in June and July. And at the other months that are going to follow, it's going to be 650. So basically, we go there, just enter a search, and then we say, remember we are on payments, so we are going to go there on payments, monthly payments. We are here. We are seeing that in May we've got 2,500, so we're going to enter 2,500, and then after that we are being told that it's going to be 650. So it's going to be 650 in June, and also we have got 650 in July. So this is what we have according to information that we are given. Then we can go to the next adjustment to see what we are supposed to do. So next one is saying 30% of all sales are on credit. Debtors usually pay 30 days later. What does it mean? I think the keyword is here, whereby the debtors are paying 30 days later. So the 30% of the sales will be paid a month after. That is 30 days later. So what it means is the credit sales for May will be paid in June, and for June paid in July, and then for May again, it means we are going to take the calculated sales of the previous month, 30%, and then we adjust it in May. So we go there to see according to the information that we are given. We are being told that it's 30% credit sales. So we are just going to calculate credit sales and cash sales for each and every month. So maybe we can make an extension here, whereby we are saying here we have our cash sales. We can start with our credit sales, and then we can have our cash sales here. So what it means is we are just going to say for the 30% of credits for April, we say 30%, which is 0.3 times 9,000, and then we see what figure do we get there. So if you say 0.3 times 9,000, that is the sales for April, you are going to get 4,200. You are going to get your 4,200. Let's try to calculate that one. Credit sales, sorry, credit sales, we're going to say 0.3 times 9,000, then you are going to get your 2,700. So what we are saying, if you say 0.3, and then we multiply by 9,000, you're going to get your credit, for April. That is our 2,700. And then we also say 0.3 times 6,000 to get our credit sales for May. You are going to get 1,800. Do the same for June, 0.3, and we multiply by 7,000. You get credit sales for June being 2,100. And then for July, again, 0.3, and then we multiply by 8,500. You're going to get 2,550. So here we have got 2,550. So this is what we have. So we, according to the instruction that we are given, we can go back to the instruction that we are given there. And the instruction is saying data is usually paid 30 days later, which means a month after. So what we are saying is the credit sales for April will be paid in will be received in May. Then credit sales for May will be received in June, and for June will be received in July. So that's what it means. And you see, if you go to our answer section, you would see that we are only concerned from May to July. So we go there and just pick those figures. So what it means, we are going to say this 2,700 will be received in what? In May. And then this one, 1,800 will be received in what? In June. And this one, 2,100 will be received in what? In July. So we are going to enter them as such. So we go there and enter that on credit sales. On credit sales, we are just going to say credit sales, we are here, and we are saying the amount that we have for May is going to be 2,700, meaning these are the credit sales for April, 2,700. And then we go to the next one, is going to be 1,800, which are the credit sales for May. And then the credit sales for June are going to be received in July. So we have 2,100. So this is what we have. Then we can move on to the next item. So remember, we were told that 30% of the sales are on credit, so it means the remainder are on cash basis. Remember, to get our total sales, we say cash sales plus credit sales. So what it means is now to get the cash sales now, we are just simply making it up with the formula whereby it becomes cash sales will be equal to our total sales minus our credit sales. So in this case, our total sales will be 100%. Our total sales will be 100%. And then you subtract the 30%, and then you are left with 70%. So it means our cash sales is going to be our 70%. So basically, that's how we are going to articulate it there in our table. So we are going to use our 70%. So we can go to our table and try to adjust as such. So if you go up there, remember we are saying 70%. So for our cash sales, we can just say, if you come here, So our cash sales, we are saying 70%. So we are saying 70% is a decimal, becomes 0.7. So we are saying 0.7 times 9,000, and we try to see what we get for April. So if you say 0.7, we multiply by your 9,000, and you are going to get your 6,300. So it means cash sales for April, we have got 6,300. And then we do the same for May. If you calculate there, you'd see that you are going to get 4,200 by saying 0.7, and then you multiply by 6,000, you get 4,200. So we've got 4,200. And then we see that the next one, we say also 0.7 times 7,000. You are going to get, let's try to see, you are going to get 4,900. So here we've got 4,900, and then here we multiply again by 0.7 times 8,500. You are going to get 5,950. So this is what we have. But if we check according to our question, we are only concerned with the months that are May to July. So we are concerned with the this range. So it means we are just going to pick as it is. Remember, these are cash sales, which means we are going to receive them in the same month. So remember, this is a cash flow statement. We record cash the moment we receive it or we pay it. So this is, we are just going to pick at the 4,200 for May, and then we pick 4,900 for June, and then 4,950 for July. So since we are dealing with our cash sales, but if there are credit sales, they were being explained from the terms of being paid or received after a month. So this is what we have. So we go there and just pick these figures as they are in the answer section for cash sales. If we come here, cash sales, we are saying for May, we are picking up 4,200. So we are saying 4,200, and then we got for June, we pick for June we are having 4,900, and then for July we are having 5,900. So these are the figures that we have for cash sales. So we go there and again to see the next item. What do we have? We can just maybe try to go down and see in terms of the next instruction. So the next instruction is saying 25% of all purchases are credit, and the business usually pays 30 days later. So simply what it means is our 25% are credit, which means our cash purchases are going to be 100 minus 25%. Then obviously we are going to get your 75%. So 75% now will be your cash purchases. So this one will be your cash purchases, as simple as that. So we are going to use 0.25 for our credit, being our 25% as a decimal, it becomes 0.25. And then at this 75 as a decimal for our cash purchases will be 0.75. So this is what we have. So we are just going there and just try to start by maybe calculating the credit purchase. So for our credit purchase, remember I was saying we are using 0.25. So we are now saying for these are our total estimated purchases. So we are saying 0.25 multiplied by 4,000. We try to see what we get there. You'd see that if you calculate it, you are going to get 1,000. So here we have got 1,000. And then again, we say 0.25, and then you multiply by 3,500. There, you are going to get your 875. Do the same there, 0.25, and multiply by 4,000, you get the same figure that you got there, it is 1,000. And I'll do the same for July, 0.25 times your 5,000, and try to see what you get. Get 1,250. So having done that, now we can go back again to see the instruction in terms of credit purchases. They are saying the business usually pays 30 days later. So it means it's a month after again. So it means the credit sales for April will be paid in May. Then the credit sales for May will be paid in June. Then for June will be paid in July. As simple as that. So we are just going to pick a month later. So for May, we are going to put 1,000. That's what it means. And then for June, 875. And then for July, 1,000. So we can just go there and either side. So we are saying we are now on credit purchases. We are saying 1,000 for May. And then for June, 875. Then we have also 1,000. So this is what we have. Then we can try to go back and see what we are going to do with cash purchases. So remember, for cash purchases, we said the 75% after we've subtracted 25% from 100%. So we are going to use 0.75. So for cash purchases, we are saying 0.75. Then we multiply by 4,000. And we try to see what we get there. 0.75. Then we multiply by 4,000. Then we are going to get your 3,000. So it means here we have got 3,000 for April. And then again, we do the same for May. 0.5 times 3,500. There we are going to get 2,625. Again, we do the same here. 0.75 times 4,000. You are going to get your 3,000. And then you get here 0.5 times 5,000. You are going to get 3,750. So this is what we have. So remember, we are saying these are cash purchases, which means they are going to be paid exactly in the same month. So we are just going to pick for May, we pick the same 2,725. Then for June, we pick 3,000. Then for July, we are going to pick 6,750. So this is what we are going to do. We come here, we come on cash purchases. So we are saying for May, cash purchases for May 2,625. Then we have our 3,000 for June. Then for July, 2,750. So this is what we have according to purchases. So we can go see the next adjustment that we have to see what are we supposed to do. So we are now on 5, which is saying in June, the business will sell an old computer for 6,000 cash. So this is going to take place in June. So it means in June, there is going to be a receipt of 6,000, which is an inflow of cash. So we're going to put it under the receipts, other receipts for June. So 6,000, we go on other section, we put in the row of other receipts, that is here. And we are saying this is happening in June. So we've got 6,000 for under other receipts. And then we can go back to see on the next one. The next one is saying in June, the business will buy an office desk. The deposit will be 850 rands, and the monthly installments thereafter will be 450 for the next 2 years. So it means we are going to buy an office desk, which is an outflow, which means it's going to be a payment that we are going to make 850 in June. Then after June, we are going to have some installments of 450. So those are going to apply after. So we go there and say we have got 850 in June. This is June. So we are just going to say plus 850. And then we are also going to have some 450 installments after that. So it means from July it will be 450. So we get to 450. So this is what we have. So we can just go there again to check if you have got any other. If you go down, you would see that this is the last item that we have according to the question. So we are here. So what we are supposed to do now is now to add at the beginning, we will open a balance of a positive 9,500. We add 4,200 of the receipts, and we add 2,700 so that we get the total receipts. So if you add them, the total that we are going to get is 16,400. And then on the payments part, we are going to add our payments starting from cash purchases. down to our monthly payments so that we get our total cash payment. So again, 16,400 plus 2,625 plus 1,000 plus 2,500. So that you get your total payments, which is we are going to get a figure of 6,125. And having done that, you are supposed to subtract this figure. We subtract this figure from the figure for cash receipts. So we're saying total cash receipts minus total cash payments to get your month-end balance. So if you do that, the answer that you are going to get there is 10,000, a positive 10,275. So if it was a negative, we're just going to present it in brackets to show that it's a negative. So this month-end balance is going to be the opening balance for the next month. So we are going to take this 10,275 and becomes the opening balance for our June. So we are saying here 10,275. So to get now the total receipts for June, we are now saying the opening balance plus cash sales plus credit sales plus other receipts. In other words, we are saying 10,275. We add 4,900, we add 1,800, we add 6,000. And then the total that you are supposed to get there is 22,975. So we go down, we try to add the total payments whereby we are saying cash purchases plus credit sales, cash purchases plus credit purchases plus monthly payments. So we're saying 3,000 plus 875 plus 650 plus 850. And then the total that you are supposed to get there is 5,375. And obviously, this one we're subtracting it again by saying total cash receipts minus total cash payments. 22,975 minus 5,375, then you get your month-end balance, which is 17,600. This is a positive figure again. And then we take this 17,600 to be the opening balance of the next month. So it's coming here, 17,600. So for total receipts for July, we are saying 17,600 plus 5,950 plus 2,100, and then you get your total here, which is supposed to be 25,650. And then obviously the next step is to add our payments so that we get our total payments. Say 3,750 plus 1,000 plus 650 plus 450. And then the total that you are supposed to get there is 5,850, which you are going to subtract from the figure for total receipts, where we're saying 5,750 minus 5,850, you get 19,800. A positive figure again. So this becomes our closing balance. So this is our closing balance at the end. So at the end, we are having a positive balance of 19,800. So this is what we have, guys, according to this question of June 2024. Hopefully this video was helpful. Those who have been subscribed, please subscribe and share. We are still coming with more videos. As for this video, I'm signing out.